what is bulls and bear power indicator, and by the end of this session, you should be able to understand what is bulls and bears power indicator, how to add it to chart, interpret and use the indicator. The bulls and bear power indicator are the oscillators developed by well-known technical analyst Dr. Alexander Elder, which is part of the oscillator family of technical indicators, and it's used to measure the actual strength of the market sentiments. The main purpose of the bull power indicator is to estimate the relative strength of buyers versus sellers in the market at any given time, whereas the bear power indicator is simply the inverse of bull power. It shows the strength of the bears, which means that if the current price is lower than the previous one, the bears are winning. The main purpose of bear power indicator is to estimate the relative strength of sellers against buyers and is plotted as an oscillator on chart. Let's look at the formula. The bull's power is calculated by taking the high price and minus with the exponential moving average value, and for the bear power is calculated by taking the low price and minus with the exponential moving average value. By default, the bulls and bear power indicator is calculated based on period 13, but traders can change this according to their preferences. Now let's look at the features of this indicator and how to interpret it. This indicator does not have a fixed range and is fully unbounded oscillator which has no lower or upper limit. The indicator plots as a histogram with a center line that corresponds to the level 0 in order to determine who is in power based on the center line. As a rule of thumb, if the bull power indicator is above 0 level, it indicates a positive sign in the market, and if it's below the 0 level, it indicates a negative sign in the market. Similarly, when the bear power indicator is above 0 level, it indicates a positive sign in the market, and if it's below the 0 level, it indicates a negative sign in the market. We'll go through the bull and bear power indicator trading technique in details on chart, and also how to use it with combination with other technical indicator. Let's begin with placing the bull and bear power indicator on chart. To place the indicator on chart, there's few methods to do it. The first method is go to insert, then indicators. Under the oscillator, select the bull's power and follow the same procedure for the bear's power indicator. The second method will be the easiest one as you click and drop it from the navigator panel. To do that, simply go to the navigator panel, indicators. Under the oscillator, click the bull's power, drag and drop it on chart. Follow the same procedure for the bear's power indicator. Next, let's look how to use the bulls and bear power indicator in trading. There's two methods in which traders can use the bulls and bear power indicator during trading. They are the zero level cross and divergence. Let's look in detail how to use them. According to Dr. Alexander Elder, the both bulls and bear power indicator should be added to the chart along with a 13-period exponential moving average. So, traders should go long when the market is above the 13-period exponential moving average, and the bear's power indicator should be below the zero line but must be in a rising condition. Besides that, another additional verification that can be made is by verifying that the last peak of the bull's power oscillator must be higher than the previous peak of the oscillator, and there must also be a bullish divergence between the market price and the bear's power oscillator, where the market should be making lower low and the bear's power oscillator makes higher low. Traders should be aware that when the bear's power indicator is in positive, it is better not to take a long position. Similarly, traders should go short when the market is below the 13-period exponential moving average, and the bull's power indicator should be above the zero line but must be in a decreasing condition. Besides that, another additional verification that can be made is by verifying that the last low of the bear's power oscillator must be lower than the previous low of the oscillator, and there must also be a bearish divergence between the market price and the bull's power oscillator, where the market should be making higher high and the bear's power oscillator makes lower high. Traders should be aware that when the bull's power indicator is in negative, it is better not to take a short position. Here are a few trade examples that use the bulls and bear power indicator with 13 period exponential moving average.